The more moving pieces you have with your tax return, the more complex it is, and the more likely you're missing something, potentially missing out on big savings or putting yourself at risk. Today, I want to dive into some of the most common tax filing pitfalls and how you can avoid them to keep more money in your pocket. With over a third of taxpayers in the US having some form of side gig, one super common mistake that's become more common is misunderstanding your taxable income. A lot of people think that if they're paid in cash or don't receive a 1099, that they don't have to report it on their taxes. The truth is that if you're earning money from side gigs, whether it's through Venmo, PayPal, or even cash, that income is still taxable. The IRS is often tracking this through forms like the 1099-K, and failing to report it can result in penalties or sometimes even an audit. Now let's talk about deductions. A lot of people take deductions without really understanding what's allowed, which can lead to problems down the road. One of the biggest mistakes is inflating business expenses or claiming personal expenses as business related. For example, if you work from home, you can deduct a portion of your home office, but only if it's used exclusively for the business. The same goes for car expenses. If you use your car for both business and personal reasons, only the business portion is deductible. Let's move on to another common issue for freelancers and small business owners: underestimating or completely ignoring your estimated taxes. This happens when you don't set aside money for taxes throughout the year, assuming it'll be just fine at tax time. But here's the thing: if you're self-employed or own a business, you're often required to pay estimated taxes 4 times a year. I can't tell you how many business owners I've worked with who didn't plan for this. When April rolls around, they're hit with a huge tax bill because they didn't set aside enough, and worse, now they're facing penalties for underpayment throughout the year. It's really important to calculate your estimated taxes and set aside a percentage of your income every quarter, and that way you're not scrambling when it's time to file your taxes and you're not owing any late penalties and interest. And you can check out some of my other videos for more information on that. Another big mistake is overlooking tax credits that you could otherwise use to reduce your tax bill. Tax credits are often confused with deductions, but they're much more valuable. A deduction reduces the amount that's taxed, but a credit directly reduces the actual calculated tax. It reduces your tax liability dollar for dollar. There might be tax credits out there that you qualify for but are missing because you don't know about them. And if you don't know to tell your tax preparer that you installed those solar panels, for instance, they might not think to ask, and you'll miss out on a huge tax credit. Don't let this happen to you. Make sure you're aware of all of the most common available types of tax credits. The IRS website can be a good, although sometimes confusing resource, and you can also consult a CPA to ensure you're taking full advantage of tax credits. This is why it's so important to have a baseline understanding of taxes. You don't need to be a tax expert, but just having that ability to know what to ask your CPA and be able to have a conversation where you both benefit is going to be really beneficial for you down the line. That's why enrolling in my Reseller Tax Academy can be incredibly helpful on your tax journey. Now let's talk about filing taxes on your own. A lot of small business owners and individuals think they can do it yourself using software, and while that's great for some, others are missing out on important opportunities or making mistakes that can lead to penalties. One common issue is just choosing the wrong software or the wrong version of the software. If you're self-employed and have a business, you need to choose a tax software plan that covers the self-employment income, along with the related deductions and other specifics. Choosing the wrong one could mean you miss deductions or end up filing your taxes incorrectly. And don't forget about state taxes. Sometimes people file their federal return but forget to file their state return, or they file both incorrectly, which can cause other issues. So if you're self-employed or own a small business, I recommend working with a professional CPA or tax preparer who understands the nuances of your tax situation. It's often worth the investment to ensure your taxes are filed correctly and that you're taking advantage of every opportunity to save. And a lot of times people ask me if I do taxes or if I just make videos all the time, and I do a ton of taxes. So if you need help, use the link below for more information or to sign up. So there you have it, 5 common mistakes that could lead to major problems when filing your taxes. The bottom line is that taxes are complicated, but the more you know and the better prepared you are, the less likely you are to make costly errors. Remember, small mistakes can lead to big consequences down the road, so make sure you're filing correctly, tracking your income and deductions, and taking advantage of every opportunity for savings. If you have any questions, post them below or come post them in my free Accounting for Online Sellers Facebook group. Subscribe and check out the links below for more resources to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.